This is ShadowQuant, Market Brief, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Thursday, August 13, 2026, and this is the New York pre-market. Now, let's get into it. The S&P 500 is holding steady in the green, but the market is caught between a resilient tech sector and a macro environment that refuses to cool. With the ECB signaling another rate hike and inflation data remaining sticky, investors are watching for clues on whether this rally has room to run or if it's just a calm before the storm.
Good morning. Let's look at the numbers. The S&P 500 tracked by SPY is up 2.5% at $772.49. The Nasdaq 100, tracked by QQQ, is leading the charge with a gain of 0.7% at $723.70. The Dow, tracked by Diamonds, is essentially flat, down 2 basis points at $537.15. Small caps, tracked by the Russell 2000 ETF IWM, are also outperforming, up 0.5% at $302.71.
So, tech is leading, but the broader market is mixed. Let's see what's moving the corporate world.
Overnight, the crypto and tech sectors were in the spotlight. Core Scientific reported fourth-quarter results that disappointed the street, turning the stock lower. Securitize fell 16% after missing earnings estimates, with a notable drop in tokenization revenue. BitGo posted a $19 million loss for the second quarter, despite an 80% surge in revenue to $4.3 billion.
Revenue growth isn't enough if the bottom line doesn't follow. Let's shift to the macro data driving these moves. The macro backdrop remains tight. The Federal Reserve funds rate is at 3.63%. The yield curve is flattening. The 10-year, 2-year spread is at positive 48 basis points as of yesterday, which is a caution signal for growth. Inflation is still above the Fed's 2% target. Year-over-year CPI is at 3.30%, and core PCE is at 3.29%. Sticky inflation and a flattening curve. Not exactly a green light for risk assets. Let's check the risk desk.
The VIX is at 15.28, which is relatively low, but the crypto fear and greed index is at 14 out of 100, indicating extreme fear. This divergence between equity calm and crypto fear is notable. There are no specific credit warnings or geopolitical disruptions flagged in the data today, but the extreme fear in crypto suggests underlying sentiment fragility. The risk is a sudden repricing if that fear spreads to equities.
Extreme fear in crypto while equities are green. That's a key disconnect to watch. Let's wrap up with what to look ahead.
Here's your watch list. First, the Nasdaq 100. It's up 0.7%, driven by the AI narrative, but Cisco may cool things down. Watch for any profit-taking if the sector fails to hold this momentum. Second, the VIX. It's compressing at 15.28, but the extreme fear in crypto suggests a potential mean reversion. If equities roll over, volatility could spike quickly. Third, the ECB. The poll suggests another hike in September. This could strengthen the euro and pressure US exporters.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This is an AI-generated market briefing by ShadowQuant. All information is for educational and informational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Market Brief. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.